Welcome to the Swing Trading with Cycles channel. It's December 3rd, 2023. We're going to do an update on Dixie today. We are most likely moving into the final stages of the 3-year cycle decline. We talked about that in the last video about a month, maybe two ago. The idea that this little rally here, so this is the monthly chart we're starting with here. This is kind of your do or die moment. Is this telling us that this was our low, or is this about to get rejected? And right now we're in the process of what looks like a rejection. And so what that would mean is that this month that just started, December, is month 35. And so easy math, 3-year cycle, that's about 36 months. Doesn't mean we have to end exactly on month 36, but it would suggest that we're very, very late in that cycle. Just thinking about the price action, look at this big drop down, right? So you had this inside month in October, and we've been talking about this for over a year now. When we printed this high in September of last year, 2022, we then had this inside month, so didn't go above the didn't go make a new high, but also didn't make a new low. And then in December, and then in November, we got the first big move down. We got continuation in December, and then we got more continuation in January. What I mean by that is we made lower lows, right? This makes a lower low than this. This makes a lower low than that. And then we have the big reversal, or what looked like the start of a bullish reversal in February, which really just ended up being consolidation. So February, March, April, May, June, all inside the same range for 5 months. Then we make a lower low, flush out all these stops. That's on month 30. And that's the swing low that we have on the board since then. Once price crossed above 103 spot 572, we had a swing low in place. So that swing low is still in place because where did we close at on Friday? So we closed at, oh no, that's not right. We are below that swing low at this point. Yeah, like let's just make this vertical line more obvious. Right. So we're just a shade below it. In fact, you can see price sort of tested it from below and then got rejected. This is all very strong evidence that we're going to make a lower low below this low. So this is our monthly chart. Let's look at the weekly to kind of understand at a more granular, more actionable level. So last week was week 20. And so if you think about the 3-year cycle of decline, we peaked in September as we talked about on that was the monthly chart. That was we were looking at the monthly candles, and that was your top on months in September. This is the week that top happened, and you can see how it rolled over, making lower lows and lower highs into a week 35 low. Then we had this feeble little bounce for 5 weeks, and then we threatened to make a lower low but didn't. This was pretty frustrating. Looked like a double bottom. Tried to make a higher high, did not. Right? This is a lower high than this. And then we did make a lower low, took out all of these stops. Again, that's the same thing that we saw on the monthly chart. This is the weekly version. So this was a 35-week cycle. And then this bearish little cycle, really just massive consolidation, was 23 weeks with a week 5 top. So think about that. We had this cycle that like took us into the top. That rallied for 17 weeks and then it declined for exactly 18 weeks. So it was a left translated cycle. And then we have this cycle, which was also left translated, very left translated. 5-week rally followed by more or less, what is that, 17, 18-week decline. And now we had this furious rally that started in July. Like, I mean, of course, the the equities were dropping all this time. So we had 11 green weeks in a row, topped out on week 12, ugly shooter candle, but didn't just drop off a cliff. Actually consolidated for like 3 or 4 weeks after that, and then we began to move lower. This was week 20 and it just closed. If you think about that principle of a left translated weekly cycle, if this weekly cycle here that we're in right now is going to be left translated, we have to decline for at least 13 weeks. So that would be a 25 week. That would mean a low on week 25, which would give us a low. I'll make it so that we can actually see this candle. Visibility, let's see style. Let's make this a white line, right? So that's a potential low. Basically the first week of January. That would be a 25-week cycle. There's no reason it has to go 25, but think about that. Just structurally, if we're gonna wipe out this massive rally, and in real time it looked kind of crazy, like, oh, maybe this really is your 3 year cycle low. This thing probably has to decline, at this point for another 4 or 5 weeks. That said, if we look at the daily chart, there's probably going to be a daily cycle low between that. Like basically, before we get this weekly cycle low, we're probably going to have another daily cycle, rally and then decline. So this is your daily chart. Look how stretched this is to the downside. At some point, we're going to print a daily cycle low, and probably very soon, if this wasn't already it, right? You imagine something like this, and then that, right? Like that's how price behaves, right? It needs to bounce at some point. It can't fall forever. Now let's look at UUP, which is a way to play, the Dixie declines and rallies, and this will be a big play. Like once the 3 year cycle bounces, obviously. So if we look at the weekly chart, thinking about the levels, 2870 looks like a magnet here. So that's another 50 cents down from where we closed on Friday. And keep in mind, there are options available for UUP, very low implied volatility. And if we're talking about a 50-cent move from here down to just getting to the upper boundary of this big consolidation zone, you could, for a December 15th, expiry, you could get something for them like the 10-cent range, like a 29 call. Or actually, yeah, like something like a 29 call for like 5 cents, which would put you at, that's, what is that, like a 6 to 1? Yeah, so if you think about how you play this through options, a December 15th 29 put is going for 6 cents, which is $6. So we're talking about really small in terms of like capital risk. But the problem, though, is that, as we just talked about, if we're about to get a daily cycle rally, we could be in a position where we're closer to the highs by the 15th. And that's actually when you want to engage the put, not right now when we're about to expect a rally. So timing, as always, is important. But that 2870 area is reading like a magnet. And eventually, before this cycle is over, probably some point in January, we probably get below 2720. So we're talking about a $2 move again, for because of the size of option, like the actual price of options generally on UUP, that could be a massive move, like a 4, 5, 7 to 1, 10 to 1, maybe even. Not to mention, this is very high probability. We're talking about a very big move in the making. And just structurally, look at this big bearish outside candle on the monthly. So that's your November candle. Once we drop below 2822, that gives us a lower low on the monthly chart. And it tells us that this move here is resuming. And obviously, that is a long way down when you just think about the fact that, when you look at the weekly, that's the lower bound of this, like, sort of consolidate, or excuse me, that's like even below this 2870 zone, like by quite a bit actually. But I say high probability we make a lower low down there. Probably not going to happen before December 15th, so I wouldn't play those options. But something like a January, January put might make perfect sense. I would wait for the rally because you're going to be able to get it for much cheaper, obviously. And last, we'll just close off looking at yields. We'll look at the 10-year yield since that's the most closely followed. And I tweeted about this. So we've had this furious rally. If you look, this is your monthly chart. From here, just look at this move. This was a move down of about 37%. This move here was about 25%. This move so far is doing about 16.5%. No reason this can't get down to your 25 to, closer to 25. Doesn't have to go all the way to 37 by any means. And look what that would mean. If we got down to like right around here, that would be about a 35% 4% drawdown, which would be kind of similar to this. All that to say, I think this decline is just getting started. And one way, and just like the dollar is moving into its 3-year cycle low, this thing seems to be declining pretty precipitously. That said, very similar to the dollar, we probably get a bounce pretty soon. I mean, look how extended this is, right? So you're gonna see, you have this, you got to see something like this, right? That's how these moves would play out generally, and TBT would be a thing to potentially short here. You can see this thing again. We're gonna get a bounce here, but at some point we're gonna come in and we're gonna fill this gap, for instance, here, right? There's a gap right there, right? Like just like this gap got filled and this gap got filled. And then we probably don't stop there. Look at the big picture on the monthly chart, right? We're definitely going below here. So that's 31.75, right? So that like these three candles become an outside candle of this. But we probably also take out this low here, right? And let's see, where would that put us? Right. So if you look at this candle here, that gets you down to 33.75. And if we get down here, that gets you down to 31.75. Like imagine these three candles taking out this low, maybe even all the way down to this zone here. The thing to keep in mind, look at this thing. This isn't a massive downtrend. And you could say, but the trend line, right? Like, oh, it's broken out. Sure, maybe, but it still has a lot to prove itself. And this is a leverage product, ultra short. So its natural tendency is to decline, to sort of trend towards zero, if you will. So puts on this in favorable spots, right? Like when we spot the next daily cycle high for the 10-year, for instance, could be a really high probability play that I'm eyeballing myself. So that's the update on the Dixie with a little bit of a review of yields as well. Thanks for watching.